What's up, traders? Today we're going to do another Q&A. This one's going to be over just trading in general. Stocks, futures, Forex. I mostly trade Forex and stocks, but it does correlate with futures, so I'm looking into those as well. So I am going to post this on both channels. I'm going to do the Q&A probably just total as a video as a whole, and then I'm going to break down each one so you can come back to it. That's something somebody asked me because my other Q&A, they had to just go through the whole thing, and there was one question they had asked. They had to watch the whole thing to get to it. It's small, but it won't be the weekly uploads that I normally do. I'll just upload them whenever I get it done. So sorry for the bunch of notifications, but I'm just going to do it. Hopefully it's easier for everybody else. So first person asked me two questions. What is the failure rate, and is this something I can do during my day job? And I don't quote me on the exact numbers. I think the failure rate's 95%. I say 95% all the time. I think that's the number I heard. It's about right. It's a lot of people just don't put the time and effort, and energy into it, and they fail. They give up. They just do the wrong stuff. I don't think it's that hard. You just gotta look at it. Is it something I can do at my day job? That's a tough one because I don't know what your job is. Do you have a computer and you're allowed on the internet? Then yeah, if you have the free time and you're allowed to. If you have your phone, you still can. I do a lot of trades on my phone, but you have to look at the charts. You have to just know what you're doing. Yeah, it's all the same chart, whether it's on your phone or a computer monitor. It takes the same amount of time, so it really just depends on your job. It's obviously a lot easier if you can just sit down and sit at your computer and just focus on one thing, and you're not trying to do 100 things at once. But yeah, I think you definitely can, depending on your job. All right, what is the learning process? This one, the learning process is doing it. There's a couple ways to learn. You jump in the markets and hope for the best. You can buy a book, you can buy a course, you can get a mentor. All of those range in price. Some you just know the price. For instance, just jumping in there and trying to figure it out on your own could cost you a lot, depending on how much you open your account with. How long is it going to take you to learn? How many losing trades are you going to have? The tuition's coming at a price regardless, whether you want to learn by yourself or learn from someone else. At least with a book or a course, you kind of know the price going in. But yeah, the learning price is just going to be experience. It's going to come with it. Even if you take the class, you're still going to have to get a few trades under your belt. You're going to have to see it firsthand before you truly kind of know what you're doing. But in the end, you only have two options, up or down. It's green or red. Those are the two colors you're looking at. So it's simple to learn, but it's harder to actually do, if that makes sense. Because there's patterns, and every book, course, anyone talking to you will show you these crystal clear patterns that they never really happen that way. If you, for instance, look at the head and shoulders pattern, those rarely play out. It looks like three triangles, the one's taller in the middle. And seeing a live view of that versus what they're going to show you in the books, it's night and day difference. So you're going to have to learn what it is first, and then learn how it really looks and how it often plays out. So really, to sum that one up, the learning process is just getting in and doing it. The longer you've been trading, the more you see, the less emotionally invested you are. Maybe not emotionally invested, maybe that's not the right way, but your emotions definitely die down. You've been doing it for a while. It's stuff you've seen before, so it's not hitting your nerves like it usually is, or like it is in the beginning. But yeah, I don't want to repeat myself. Just get in there and do it. Learn what you're doing and start doing it. Do I need 5 monitors to actually do this, or can I do it with less? Well, I've done it without any monitors at all. I've done it with just my cell phone. I've traded often on my cell phone. I was doing this at a day job. I've been trading for a while, and all I had was my phone. That's all, and I was allowed to be on it, but that was it. Then the charts are small, but I did it. I was still successful. Made plenty of trades, winning and losing. There's a lot more stuff you'll see on a computer monitor because you get a much broader picture. You can see, when you zoom out on your charts, there is a big picture you can see, and the phone doesn't always put that in there. So there was plenty of opportunities. I missed out on the phone, but you do see enough. I got in plenty of trades. I think I could have done a lot better had I just been on a computer the whole time. So, no, you can do it all on your phone. You can do it with one monitor. The monitors, it does make it convenient, though. So I've traded on my phone. I had my computer hooked up to a 60-inch TV, and just that screen real estate, it makes it super convenient. I have 3 monitors now. The TV was probably a little too big, and I was sitting pretty close to it. But it is convenient. Like a lot of my trades, there are ETFs, exchange traded funds, that they kind of correlate. They go with a future that's trading. So it's nice to have both of them pulled up, and I don't like it small. I like it big, so it's easier to read. So on one monitor, I do have all the futures pulled up that I'm looking at, and then I'm trading on the other monitor. 2's pretty good for me, but it's just a convenience factor. If you're not scalping, if you're new to this, maybe you're swing trading, you're not in and out in seconds, then no, you can do it all on one monitor just fine. You're bouncing back and forth from windows. Having the multiple monitors just makes it super easy because you're just looking left and right, and the information's always there. If you want to pull up news, it's there. So it's definitely a convenience factor. I don't think it'll affect your performance. You're going to make the same trades unless you're trying to scalp. You're getting in with a lot of money. It's barely going up, and you're getting out. Scalpers are typically... they're making a whole bunch of trades in the same day, and at that point, with the amount of money you would need in your account to do that, you probably do have a few monitors because you have everything pulled up at once, and that's when seconds do matter, because you're trying to take advantage. You don't want any slippage. At that point, yeah, I would say run a multiple monitor setup. This is a quick one. How hard is it to start? Have you ever picked up a phone? Do you have a smartphone? You ever been on a computer? Because that's about how easy it is. Get online, connect to a brokerage, and fund them your money. They'll take your money. They'll gladly take it, and they'll give you a whole list of stocks, futures for it, any pairs, anything you want you can trade. And you can just click buy, sell all day long. So the physical getting started process, super easy. You could have it done in 5 minutes, which I do think correlates to the failure rate. People get this money and they get this access to the market, and they think, here they are, they're a trader. Some more the younger crowd, they like to say they're a day trader. It makes them feel sophisticated. I've seen them throw that name out there. They trade stocks. They're investors. They fail a lot. They blow up accounts, but it's a status thing for them. But yeah, so it's super easy to start. I didn't want to go on a rant. Super easy to start. I think that's why a lot of people fail. If it was a little bit harder to get into it, I think it would just give more people time. It would be less of an impulse thing, I think, if it just took a little bit longer, maybe a little more screening. But, to each his own. I would be very annoyed if I had to open an account and paper trade for 30 days before they let me trade live. But I fully understood what I was getting into before I got into it, and a lot of people don't. And again, that's why a lot of them fail. How much do I need to start trading? I started with $100. My buddy started with 0. He used my referral link. He got a free share of a random stock. He sold that and bought some penny stocks and grew his account from that. So he went from 0 to $50. That was 0. I started with 100, and I'm up well over that. And that's more for the stock world. For Forex, depending on what country you're in, margin's kind of hard to find in the United States compared to some other countries. But I would say I wouldn't jump in Forex if I didn't have probably $1,000. I've seen people jump in with 100, and yes, they grow their accounts to a crazy amount. but they also blow them up just as fast. Those people are in 100 after 100 after 100. One blows up and takes off, and that might sound super tempting to you because you might just go through a few $100s and be excited when you get up thousands. But if you just do it right, and remember, it's not a sprint; it's a marathon. You're in it for the long haul. This is a career. This is something that doesn't have to change or ever go away. Just don't rush it. Just get in and get some trades under your belt and quit worrying about the dollar amount. So, how much do you need? First of all, I wouldn't put $1 into it if you don't know what you're doing. Paper trade for a while. Unless you're 100% like me, I did not paper trade at all. I think it's worthless. For me personally, I wouldn't gain a single thing from paper trading. I just wouldn't pay attention to it like I would with real money. If you are taking those steps, start off small and don't put anything in you wouldn't be afraid to lose that second. But so definitely, yeah, start small, $100. See if you can grow it to 200, and then Forex, I would at least start with $1,000. And then don't forget it's a percentage game. I am just as excited now on a 20% day as I am when I had a 20% day with $100. I remember it was right at $100. I made $12 that day. I was pumped. And my buddy argued with me. He said that was a lot of work. You only made $12. I could do anything for $12. And he reined it. I was in it for, it took me 4 hours. So he ends up playing it out to $3 an hour and tried to compare it to a fast food worker. So if you hear that, don't let that discourage you. Just remember it's a percentage game, because my 12% now is a lot more than that, but I'm making the same trades. Here's one I get over and over, and I'll finally put it out there. Can I make $1,000 a week trading? And for the one that's asking, I am rolling my eyes. I get that question so many times. Can I make a certain dollar amount in a certain amount of time? And the answer is yes. Like, of course you can. Like that, I don't even get that question. How much money do you have? That's the numbers. $1,000 a week. If I had $100,000 account, I could do that in a day. You would need one trade at 1%, and there's your $1,000. Can you make $1,000 a week on $100? You have to get 10 times the amount. That'd be crazy. So probably not. And if you did, I'm sure you could. Blind luck. There's no way anybody could say they could off that. They could turn that $100 into an amount and make $1,000 a week easily. That's very doable. But it just takes time, and it depends on what kind of trader you are. I don't have to be a good trader if I had $100,000 in the bank. I just need to get lucky on one trade, and I've already made thousands of dollars. It's when you have the smaller amounts and you want it to get somewhere, then you gotta really trade quality over quantity. $100,000. I mean, yeah, you'd still want to focus on quality, but I'm looking for trades that are 5 to 10%. That's what I'm looking for. And with $100,000, I just need to find a trade that's going to go up to 1 or 2%, and I've already made that much, and I would do one trade a week. So yes, you can make whatever dollar amount you want. It just depends on how much you have in your account and your level of trading that you're at. So that's why I roll my eyes. I hate that question, but it is a question a lot of new people ask. So I did want to answer it instead of just continuously ignoring it. But yeah, how good are you and how much do you have in your account? That'll determine how much you have, and then what the markets allow, obviously. So this guy has been following me for a while, and he can't figure out which. He asks, should I start with stocks or Forex or futures? And I do think stocks is easier to start with. Watching stocks go up and down is like watching turtles race. And Forex, it moves a lot faster. The liquidity is there, but it takes more. It can be very profitable, but it can also take your money very quickly. In Forex, there's major pairs that everyone trades. A lot of people trade at least. And like I said, they're up and down. There's a lot there. So there's not that much to pick from. Versus stocks, there's close to 10,000 stocks you can pick from. So narrowing it down which one you're going to trade can be trickier on stocks, but it's definitely worth the wait. It's worth the time investing. It's not even really that much of a wait. You just got to figure out how to use a scanner, and that's it. So yeah, so just starting out, I think I took the right approach. Just starting out, I did stocks. I grew that account, and then you get used to candlesticks, you get used to patterns, and then you can jump into the Forex, the futures world, where stocks have a time frame. For me, it's 8:30 to 3. Unless you're trading aftermarket hours, then it's 8 to 5. Forex closes Friday night and opens Sunday night, so there's only one day I'm not trading. So that's a perk of that, but at the same time, it's also a downfall because you are watching that thing round the clock. If you have a trade open, you kind of have to keep an eye on it. So if you're new, take things slow. I'd probably go with stocks. My bread and butter is ETFs. I trade those all the time. If you're not in not a real brokerage, so there's more advanced brokerages, and then there's Robinhood. Robinhood, zero commissions. I'll do a whole video on it, but you can't short stocks. So shorting something I do all the time. When something drops, it drops fast. Fear runs this market. Everybody's afraid of everything. So you'll see when stocks have red days, they're red, they drop fast. So I do short stocks all the time. So in Robinhood, you can't do that. But there are bull and bear ETFs. So like I said, they correlate off the future. When the future goes up, one of those ETFs will go up. The other one will go down. So if you think it's going to go up, then you wouldn't get that one. If you think it's going to go down, then you would buy the bear one that's going up. So it's essentially shorting. It's not the same, but it is a way to do it inside an app or a brokerage like Robinhood. But with so I use TD Ameritrade's Thinkorswim. They're a direct access brokerage, so there's not a lot of slippage. There's no middleman. And again, I'll do a whole video on just that because it is important to know when you're picking a brokerage, not just the commission fees, but are they a direct access brokerage? Because that's the big one, that there's no middleman in between. Robinhood, when I place a trade, I tell Robinhood tells the other person, which then tells the market. So there's slippage there. You'll say you'll buy at one price, you think you're getting it. By the time it actually fills, it's a different price. So the slippage is there, and it's a lot more than in something like a direct access broker, like on the Thinkorswim platform. So that does it for the questions. If you're new here, please don't forget to subscribe and hit that little bell to view the next videos I post. If you liked it, please leave me a thumbs up, and let's not forget to lock in profits, not losses.